Welcome to the Seattle Investors Club podcast with Julie Clark and Joe Bauer, where we share the nuts and bolts of real estate investing from our 20-plus years in the industry. Sit back, relax, listen, and immediately take action. Are you ready? Here we go.
Welcome to the Nuts and Bolts of Real Estate Investing podcast. My name is Joe Bauer, and I'm here with my co-host, Julie Clark. Julie, how are you doing today?
I'm doing great, Joe. I'm actually still have on my snow boots for our, like I said, I like to call it our cute little snow that has dropped here in the Seattle area. Little late school start today, which is ridiculously silly since we essentially have, just wet roads here, but you know how it goes. Hoping that it dumps a lot more so we can go play out in the snow here with all our friends and neighbors. We'll see how it takes us this week. Where are you at right now?
Sounds awesome. I'm in Steamboat Springs, Colorado, which has the best powder I have ever skied on. It is so unreal.
Well, you know what's crazy about that? I think that people at Stevens Pass might be talking about the best powder or at least the best local powder they've ever skied, because yesterday, in the last few days, it's dumped so hard that people are getting stuck up there. I mean, hundreds and hundreds of people got stuck up. I think it was between like Skykomish and Gold Bar somewhere up there, just with the massive amounts of snow and the highway getting shut down. But some of my friends made it up there yesterday and said it was absolutely, absolutely epic. So thinking about playing a little hooky this week with the girls. But I'm jealous because you're living the life right now. That's for sure. I'm watching all your stuff.
Well, I love it whenever I see your pictures up there too. I'm like, yeah, we got to go sometime.
Oh man, it is like a dream come true. It has changed my life to have my kids and us be able to snowboard together. And, they're almost to the point where we can just totally hang together. I mean, they are, but they'll just continue to get better. And of course they'll be way better than me, but I am loving it, loving it, loving it. But with that said, what I am also loving is Certain Lending's new loan product. And today, the reason we're on talking to you guys a little earlier in the week than normal is because we want today to put a special spotlight on our friends at Certain Lending that have a new loan product that we want all you guys to know about right now. So, hey, Nghi, what's up, brother?
Hey, guys. Nothing much. It's Monday.
Wasn't sure.
A lot of fires to put out this morning.
A lot of fires putting out. For a second there, I wasn't sure if you were with us. I thought maybe you'd already been buried in all your new loans that you guys are crushing it on with this new product. Thought I might have lost you there for a second, buried under loan paperwork. So what's happening? Tell us what's going on with Certain Lending these days. Give us a little check-in.
No, it's been good. We're having a record month every month now for the past, 6 months here. And we're also, I think we're moving to a new office starting in February. It's going to be in kind of the South Center area, but kind of a central location, and it's going to be a 6,000 square foot office. And
Ooh.
I think we're looking to hire about 25 more people by the end of this year.
You know what would be super rad if you guys did this for Certain Lending is if you guys reserved or by any chance had like 2 or 3, I'll call them hot desks, where investors who are having appointments in the area, whatever, could stop by and get a little work done in between, pop into their favorite hard money lender. Now with really, actually, I'll call it non-hard money sounding loan products, actually. That would be cool to be able to pop in there and get a little work done for an hour in between appointments down at your new offices. So think about that because...
No, I actually like that a lot. And that's why we're opening this new office to be more client-facing, right? I mean, Home Depot, Lowe's, and Costco are within 5 minutes. So, you can stop by and grab your supplies and come chat with us.
That is super rad. Well, what's also important are, I know for you guys, all your lending buddies, you and Albert hanging out is, some restaurants around there. So what are you planning to eat in the area? You got anything picked out yet? Because I know you guys like to, try different restaurants and stuff. Any good stuff around there?
South Sound has a lot of great restaurants. I think for us, the closest place to us is the Sushi Land. I think one of these days we're going to try, Alice is going to try out the Sushi Land challenge. and I'm going to invite people to come watch it. Watch it eat
Oh,
30 plates of
yeah.
sushi.
You know what? Yeah, we should get Sushi Land. Certain lending should get Sushi Land to be a preferred or like cross marketing thing there for you. I hear it. Well, I'm already hungry. It's only 10:45 in the morning right now. So thanks for talking about sushi because I'm starving already. I don't know what it is about this podcast, but every time I jump on the podcast, all of a sudden I'm like starving. So I don't know why that happens, but enough about me. Let's talk about certain lending and your new loan product. So tell us what's going on. Let us hear all the good details here.
Yeah, so I mean, we created a 30-year loan product that is the reason why we created it is because most people when they kind of do the rental loans or even the BRRRR strategy, most of it revolves around conventional financing, right? Most BRRRR strategies are like, how do we handle the refinance? Here's all the rules with conventional loans, and we found this to be very limiting, right? And as you know, banks don't really have great products for real estate investors who are wanting to invest in those 1 to 4 unit residential properties, and also most real estate investors don't qualify for bank loans, right? Because they don't have a W-2 or they don't have that strong or stable income because, most of us like to show as little income as possible to save on taxes. And so we thought, why don't we just create a product that overcomes a lot of those limiting factors? And we've done that, and we've been doing it for the past 3 months, and it's becoming one of our more popular products as well.
Awesome. Tell us what that looks like. So a 30-year loan product, is it, what kind of rates, what kind of terms, how long can we go on this, and maybe some examples of how you've put it into place for some of our friends here already. And let me ask me, first of all, is this something that's available in all states or certain states right now, or what?
So obviously in Washington, since I'm here, but we've done these loans in about 12 different states so far. We can technically go to 45 states. We just haven't seen that business come in. But if we see enough demand for a new market, we'll gladly enter for our client.
Awesome. Maybe we can help you spread the word on that.
Yeah. And so our 30-year product, so the rates start at 4.75%, and the rates are really determined by your credit and your LTV, or what LTV we're putting on the property. We can go up to 80% LTV, and that's a huge deal because with conventional, I think a lot of times you're limited to if you're doing cash out, 70 to 75%, depending on if it's a single family house or a multifamily, right? The other kind of big thing about conventional is that, here's all the limiting factors of conventional that we saw, right? One is qualifying for it, right? As I mentioned, for real estate investors. So we don't really care about debt to income. We don't even care about the borrower's income that much. We don't ask for tax returns or like pay stubs. We just care that the property cash flows, right? And we set a requirement that it has to cash flow at a 1.1 debt service coverage. So basically meaning your net cash flow, your NOI, is 10% above what the monthly payments are.
Which is actually still lower than what banks might prefer at like 1.25, right? I mean, just
most banks or most commercial lenders are at 1.2 or 1.25. So that's definitely right. And again, that helps as well in the Seattle area because we don't cash flow too well here.
Word. So we got
the second limiting factor.
Go ahead.
Yeah. So the second limiting factor is with conventional loans, most people want to, if you're trying to do the BRRRR strategy, you want your cash out as soon as possible, right? And with conventional loans, they basically make you wait at least 6 months for it, depending on the lender you talk to, in order to get cash out. And so for us, it's like as long as the property is rented and leased, we'll give you that whole up to 80% loan to value. Doesn't matter. There's no seasoning period at all. So you can finish the rehab, and after a month, you can get your money back, or more even.
Is there a limit on the amount of cash you can get out, or it's just limited by loan to value or loaned on in your?
It's mostly limited to the LTV, right? So I mean, there's things that limit the loan amount. One is the 1.1 debt service coverage requirement, right? The other one is just 80% loan to value. If you're a newer investor, we might, if you've never done a rental before, we might say, hey, you probably we'll only let you go up to 75%. And then there's also, we have this thing about rural areas. If it's kind of in a small town, less than 20,000 people or something, or if it's in or even a resort town, we might limit that down a little bit more as well, just to kind of account for the risk.
Right.
But for the most part, core areas like Pierce, King, Snohomish, we'll go up to 80% loan to value.
How are you counting like Airbnb premiums?
So we can consider Airbnb. I think we prefer, those regular long-term leases. But if it's an Airbnb that's been operating for over a year, I think we can take a look at it. Right.
Airbnb or boarding room style management or leasing, right? Is there any?
Yeah,
all good.
We've looked at adult family, boarding houses, even like renting by the room. I think all those we'll consider, as long as the income can be proven. We'll definitely consider those loans.
And how does somebody's credit play into it? Does that just increase? If somebody has marginal credit, it doesn't matter, or it matters?
So our credit starts, at least right now. Otherwise, I have to disclaim that obviously over time our underwriting criteria can change, right? But our credit minimum is 660 at the moment. And so if you're above that, we can do loans. And we have, depending on what your credit score is, this is kind of like any long-term loan, whether even conventional, your credit score puts you into a different box with a certain rate. And so we kind of do the same thing. Right now we tap out at about 740. So if you're at 740 or higher, you'll get the best rates.
And what if somebody has a partner and one partner has the credit and the other partner doesn't?
As long as they're on title, we'll do the loan to them. And right now we only require one guarantor. So whoever wants to be. So
you're not blending you're not blending their credit by any means. One partner who has the better credit. So if somebody had like a credit partner, that could carry it, right? And then it's just between them they're both going to be on the hook, right? But just looking for people to understand how important it could be to have a credit partner sometimes.
Yeah. And we're truly supportive of it.
That is fantastic, guys. This is insane. So what are the loan terms other than, so I assume, how does rates go up beyond the 4.75?
So, I can give you an example. If you have good credit, 740 plus, and the other factor determining the rates is how much you're wanting to borrow against the LTV, right? And so again, we cap out at 8% LTV. So someone with a pretty good credit score, 740 plus, who wants 80%, and the loan and the cash flow supports it, it'll be right now 5.75 for them as a rate. And we do also allow one more. We allow loan rate buy downs as well. And so you can bring that down maybe half a percentage, so 5.25, and you just pay a little bit more points for that. But it'll break in. If you plan on holding a property long term, right, at least 3 years, I recommend most people take that buy down because it'll benefit you in the long term.
Right. So tell me again the difference between, I think you said we start at 4.75 and now we're talking about 5.75. Clarify one more time where we're getting to the differences between those rates.
So one is, if you are looking, so 4.75 is for a pretty good credit, low LTV, right? If you're like at 50% LTV in a property, which is pretty common in the Seattle area, especially if you're basing things on cash flow, you'll get that 4.75 rate.
Got it.
Or if you're like at 5.25 and you want to buy it down to 4.75, we can allow that as well. But if you're looking for the highest leverage, you're probably going to be in the mid to high fives. And if your credit is, pretty bad, like under 700, you're probably looking at something in the sixes.
Got it. Okay, awesome. Well, let's talk about some scenarios that you've been able to knock it out of the park for people with this new loan product. Oh, let me ask you though one more thing. 30-year loan. So the term, this is a 30-year term. Is that right? It's not like a amortization of 30 years with like a 2-year loan. Am I hearing you correctly?
Yeah, no, It's a full 30-year loan with 30-year amortization, right? We do have a 3-year prepayment penalty, again, because this is fully intended to be a long-term loan. If you wanted a 2-year loan, I would just put that in a bridge product instead. The cost of the loan itself, outside of the rate, is just a point and then a $9.95 fee at the moment.
Okay.
And then compared to conventional, we can lend to individuals, entities, or even trusts, right? That was the other shortcoming, is that conventional loans you have to do in your own personal name. And we don't have any limit to the number of loans you can do here. I know conventional, there's a limit of 10 finance properties. Some other things is that when it comes to, we'll actually finance wholesale fees as well. I know banks don't like to finance wholesale fees, but we'll consider it in our loan product. And so if you're buying something from a wholesaler that's turnkey and ready to go, we'll help you finance some of that cost as well.
This is like a dream come true, guys. This is like an Christmas present. It's like Christmas. Instead of Christmas in July, it's Christmas in January. What's going on here? Holy smokes! Jeez.
Well, we have been doing it. We did actually a few loans over Christmas too. Like I said, we've been doing this for 3 months now, and so I've seen a lot of repetition for it, and our clients do really love it. Right. I think the other big factor is just like closing time frame, and I'll tell you a couple of stories about it. But we're typically a 2 to 3 week close. And the biggest thing is just, getting the appraisal in, but we can usually close within a week after the appraisal comes in, or the appraisal right when you contact, or right when the loan's ready to go. Sometimes we're able to close in a week or even less.
And who's paying for the appraisal? Is that included in the fees that you're charging?
Yep. So the fee that I quoted, $1.9985 fee, that includes the appraisal.
Got it. So this is crazy. I'm slightly speechless, which is unlike me, to be honest, because this is so awesome. I mean, so give us a story here quick, and we're meant this to be a little commercial for you guys today, not a long podcast. So give us a case study on when you've been able to knock it out of the park or save the day here for some of our local friends so far.
Yeah, well, I'll give you 2 stories, and it happened last month in December. So the first one is that we had a client come to us. He was working on a rental loan. He was buying I think a triplex in Tacoma, and he was going through a mortgage broker that was using a non-QM product. I think it was like Angel Oak. And so the lender kept coming back and asking for more documentation. They've had to extend the contract 2 times already, and the seller basically said, "No more. If you don't get this done, I'm keeping your earnest money." Right. So a week came out to closing before a few days before the final extension deadline, and the client basically lost faith in their lender, who was still asking for more documents. And so he needed to close as soon as possible. And then he came to us because he heard about us from his real estate broker. And we were able to get the loan docs out in 1 business day from when he approached us, and close this rental product to us LLC at 4.75% interest.
That is insane. Do you think that's sustainable? I mean, you're not by any means advertising that you're guaranteeing to get loan documents turned around that fast. But the thing is that if you can, you will, right?
Yeah, I mean, I had to ask some of our team members to work overtime on that one, but it was like, the client needed it. We didn't want him to lose his earnest money. I mean, I can tell you that anyone you talk to at Certain Lending who's on the front end side, we're all investors as well, right? So we know what it feels like. We've worn the hat. We know how important it is to close. And so, I mean, we get it, right? And so, and this loan, you're right, it isn't typical. He already had an appraisal done by his previous lender. And so we were able to take that appraisal, get it reassigned to us, and close it quickly. Otherwise, that's a really good point right there. So normally, because you do have to get an appraisal and you will order that really quickly, what do you think is the average time that people should have their expectations in line to get this closed? I mean, if they already have an appraisal, that appraisal has to be within how many days, within 30 days or what? I believe, and I don't have an underwriting guideline memorized, but I believe about 45 days.
Okay.
So they have one, and the nothing's guaranteed, right? I mean, I can't guarantee this closing until I look at the deal. And not all appraisers will actually allow us to reassign it to our name. And so those are 2 big factors. But with this loan, I mean, this guy was really organized. He had all his docs ready to go, and the appraisal was ready. So we were able to perform on it.
Fantastic. What else you got? This is all good stuff.
So we had another client too who we started. I think we did his first loan back in October, right? And at that time, they were, they've been shopping around. They've been working with other large asset-based national lenders like Vizio, Lending One, Lima One, all these other guys offering 30-year loans, but without qualifying on your income, right? And so they tried a lot of them, and it came out with a lot of headaches. Pricing that was killing their cash flow because their rates were higher, and ultimately they didn't close on most of those deals. And so they came to us. We did their first loan in October, and then since then we've closed 6 more loans with them, 7, and then 2 more in the pipelines in the next couple of weeks in 4 different states.
Wow.
And so, I mean, 2 of these states we've actually never done business in, but because they're like, hey, we have a business model, we're going to go wherever you guys allow us to go. And so we went to new states for them, and so far it's been a great relationship, right? And I can tell you, they first came to us as well because, again, it was another situation of, I don't think our current lenders can get this done. Can you close in 1 week, right? And so that's important, right?
Yeah. This is awesome. I mean, this is what certain lending was all about from the beginning, right? And trying to solve the problems, that investors and borrowers face, out there in the general lending, world out there. And it looks like you guys have come up here with something that is filling a gap, right? It's going to be interesting to check in with you 6 months from now to see how it's going. Now, again, also, if you guys want to learn about this, so needless to say, we felt like this is such a special loan product. We wanted to record a little commercial podcast here for you guys because we love our friends at Certain Lending. They have a great moral compass, which is so important to us here at the Nuts and Bolts of Real Estate Investing, and of course, Seattle Investors Club. We do have people listening from other states. And so, Nghi, if there's people out there that aren't able to come to our meetups that are in other states, what is the best way for them to get in contact or submit their deals for review for your team? If they are we have people listening in Oregon and California and Florida and many other states, which is pretty fun for Joe and I. How can those people get in touch with you with their deals they need to get done fast?
Well, I can tell you all those states that you mentioned we can lend in. But the easiest way, we're a fintech company, so the easiest way is just go on our website, www.certainlending.com. And then you can submit your deal. It takes about 5 minutes, and then we'll look at it. We'll get back to you within 24 hours, and then we'll get it going.
Awesome.
If you want to talk to someone first,
will those guys be talking to people out in that area, or will they end up talking to one of the West Coast guys like you or Alex or somebody if they're off in Florida or California or wherever?
So, I mean, right now, most of our team is situated on the West Coast. But obviously, we're also hiring and expanding in other states, like on the ground. I can tell you that even though I'm here in Seattle, I mean, I've invested in 8 different states, right? And we've done loans for clients in 12 different states so far. So it's not too much of a concern for me.
Yeah.
And I've been shopping around for lenders too. I mean, I borrow from about 24 different hard money lenders myself, so I kind of know what's out there over the past 5 years of experience. And by the way, if you want to talk to someone firsthand and not go through the website, feel free to email us or call us as well. The email for us is Team Nghi, that's TEAMNGHI @certainlending.com, or you can call us as well at 206-237-0105.
Good stuff. Good stuff. Very exciting. And beyond that, if you are over here in the Seattle area or feel like visiting us up from Oregon or Idaho or Pacific Northwest, Nghi and his buddies, including some of our other friends like Beth and Matt from Flynn Family Lending, Albert Bowie, some of our favorite local lenders, maybe Keith Pitch from Loan Depot might pop in there as well. We love Keith. You guys have what's called office hours. Tell us about that and where people might be able to follow your lending meetup, where they can come talk to you. Are you doing it weekly, monthly? Let us know, or maybe you're going to ramp that up this year since you guys are getting so popular.
we found it, again, we respond to needs, right? And so we found that a lot of people want to talk about their properties or their financial scenarios, whether it be for the immediate deal or for their strategy for the next 5 years, right? And so I just basically sat down with some of the lenders that I like and trust. So Albert's one of them, Matt and Beth, we recently, and we just picked, core spots in Seattle, and now we recently had one in Bellevue, where we sit down at a coffee shop or something, and you can just come visit us anytime you want, and drop in and drop out anytime.
And how can people find out about when those are happening? Do you have a meetup, or do they need to get on an email list of some sort, or how can they be communicated with to get notified of when and where you guys are having these, quote, office hours?
Right now we're not too great about putting on a regular schedule. I think that's the goal for February next month. Right now it's on our meetup page. If you go to www.meetup.com/real estate at work, so that's REALESTATEATWORK. That's where it's currently held now. We actually might move it to a new meetup soon as well. And so I think the best way is just email us, right? And we'll send you
let me keep it simple for you guys. Nghi, you will always post that meetup announcement on the Seattle Investors Club Facebook page. Agreed?
That's true. I always will.
Okay. So you guys, if you're not, wherever you are, you can join Seattle Investors Club on Facebook, where these types of announcements from Nghi and his lending buddies are also posted as well. So you should jump on his meetup page that he just mentioned, but you can also, as a backup, get on the Seattle Investors Club Facebook page, where all our meetups and all our special things are announced, regardless of where you are in the country. We'd sure like to have you jump in with us, as well as I'm sure on Wari and everywhere else in town that we all chat during the month. So anything else you want to add on this, Nghi, since this is kind of more of a commercial than a full-blown podcast today? We just discussed before we jumped on this podcast that we are going to record another separate podcast with some case studies on different scenarios with certain lending at another date and time. So today we're going to get wrapped up, but anything else you'd like to add today, Nghi? We love you guys, and thanks for your support of Seattle Investors Club. We are proud to have your name next to ours, and look forward to a kick-ass 2020. Can't wait to see what you guys do in 2020 and what else you come up with to serve all our local investor friends here, or our friends actually around the country. What else you got?
Yeah, it's going to be a fun 2020.
It's going to be
big.
Well,
I think one of the mentions is that you mentioned, Florida. I mean, we've been trying to do deals in Florida. Not all deals work. I think the biggest constraint I've had when, looking to finance other deals in other states, we do have a loan minimum. And so right now it's $125,000. So if we can't put a loan on it, which actually means $156K at least in terms of value, because, at an 80% LTV. So if your property is not worth at least $156K, we're going to have a hard time putting a loan on it.
Got it. Good point. That's valid. Something important to think about, right? Maybe on our next podcast, we can also talk about what people should do who are in the low dollar need situation. We'll cover that on our next podcast with certain lending, which will roll out here, I'm sure, in the next month or two, you guys. But other than that, I'm going to wrap it up because I'm hungry, frankly, and need to get back to work, crank out some deals here and some servicing of my own clients. And I love you both. Joe, I'm sure you're going to jump back out on some mountain and make us all jealous. Make sure they're following The Fantastic Life on Facebook and Instagram and all your social media channels. And other than that, guys, we look forward to seeing you at one of our local meetups in 2020. You can go to Seattle Investors Club, search Seattle Investors Club on Meetup, or simply join our Facebook page, Seattle Investors Club, to get those announcements and get on our email list to be reminded of our handful now of weekly meetups. So I won't cover that today. Call me with questions or contact me at julie@seattleinvestorsclub.com if you need anything from yours truly. But other than that, we're going to sign off. Everybody be safe, while they're out there driving and playing in the snow this winter, and we will all see you soon. Ciao.
Thank you, guys. We appreciate you.
Thanks for listening to the Seattle Investors Club podcast. If you have questions that you'd like to have answered on the show, shoot us an email at info@seattleinvestorsclub.com. Now go out, take that action, and build that real estate business. Thanks for listening.